Good morning, and you are welcome to this will be lecture 3 on dealing with the correction of errors. All right. So we want to look at question 2 and hopefully add question 3 in this one video. So we start with reading the question, and we are told that the trial balance of Asampana Enterprises as at 31st October 2021 failed to agree. The difference is a shortfall, and it is 1.350 on the debit side. Was placed in the suspense account. So the suspense is a debit, and you go on to read, and these are the errors that happen. And we know that we are going to use general journal to correct the error. So that will be our A. We will draft our suspense account. Then it says that assuming the net profit, the net profit arrived at on the basis that the trial balance figures was 2.58700 500 was prepared using these errors. Then what should we do in terms of correcting it? All right, so what we need to do is to straight away go into our general journal, and we are looking at this one in the books of Asampana. All right. Okay, so you draw your general journal. Okay. So it has to be that long. Maybe the entire full page of your answer booklet. Okay. Then let's put some numbering here and put our particulars or details. You should write only one. Don't write the twos like particular slash. Just pick one. All right. So we have our debit. We put in our CD sign. And we have our credits. Put in our CD sign. All right. So what do we have to do now? We pick the first journal. So A. We are told that bad debts written off of 169,500 were not recorded in the books at all. So if it is not recorded in the books, just like omission, all right? So that is that. Even though management had given approval for their write-off. So it's an omission. And if it is an omission, this one, it doesn't affect the balancing of the trial balance. Because why? You are going to do the double entry. It wasn't done, so you will do it. That's all. So what is bad debt? Bad debt is an expense, you remember? Good. Every expense has what? A debit balance. What do we use bad debt against? Receivables, all right? So receivables we know has debit balance, but some of that receivables, which is having a debit balance, is to be taken out. If you know receivable has debit balance, you are taking something out to go to the credit side, you see, just to take it out. And you know bad debt is an expense. So quickly, what you do is to do bad debt. All right. Figure is 169,500. Then you credit your receivables, trade receivables, all right? So 169,500. So being omission of bad debt, now corrected or now recorded. So whichever one that you write, that will be it. That's it. All right. Then we come to the B. The B simply means that cash purchases of 744,000 was recorded in the cash book only. Good. So if it was recorded in the cash book, why didn't we do the other part? So that is where we are coming to do. Now, cash purchases has debit or credit balance. Debit balance. Purchases is just like an expense. So something is going out. It's just like as an expense. So if the credit was done in the cash book and the debit was not done in the purchases, which you know is a debit balance, because all payments out is a debit. So expenses you are paying, debit. Cost of sales, debit. And this one is part of cost of sales. So what we need to do is that if it was only recorded in the cash book, then it means let's do the purchases one. So this is it. So you do purchases. Now, This one is going to the purchases account. All right, whatever you purchase, that will be it. You purchase good, the debit will be good, or so it's going to the purchases account. And don't forget, purchases account is in the P&L also. So the credit, as in the cash side, was done. So our credit therefore becomes what? Our suspense. So how much is that? 744,000. 744,000. What do we do? Being purchases, cash purchases recorded only in the cash book. Now corrected. I try to make the narration here as simple as it can be. So use the question to do it. That's all. We go to the next one. Salaries to Gidi Gidi. 1356 was debited to telephone. So this one to something should go to salary expense. It went to telephone. So how do you correct it? Remove it from telephone and bring it back to expenses. Salary is an expense, so we are debiting salaries. And we are crediting what? Telephone, just to move it. All right, so telephone expenses. How much is that? 1356. 1356. That's all. So being salary expenses recorded to telephone expenses or in telephone expenses. Now corrected. This one is what we call commission, right? Error of commission. But you don't need to memorize those things. You really don't need to. It's not important. So let me extend my lines. All right. So that is that. The next thing is what? Sales account was overstated on page 200 of the sales day book. It was overstated. If something is overstated, you first of all ask yourself, sales, does it have credit balance or debit balance? Credit balance. And if it has a credit balance, you remember what I told you, E and I, sales is part of I. All I's have credit balance. Now, if sales was overstated, we need to reduce it. So what are we going to do? We are going to debit the sales. So we are going to debit the sales with the overstated amount. All right. So we will debit sales with 795,000, right? Corresponding entry, of course, suspense. All right. So that is that. The overstatement of sales now corrected. That's all. It's fast, right? Yes. Purchases account in the general ledger has been undercast by 96. The same thing. So now purchases, does it have debit balance or credit balance? Debit balance. If it was undercast, it means that the money was short recorded. So we need to increase it up again. So that's all. So what we will do, we will debit our purchases. I nearly wrote debit purchases. So debit purchases, then corresponding entry, suspense. So how much is that? 96,000. 96,000. So purchases undercast. Now corrected. I think the error is getting easier, right? Yes, the more you practice, it will be easier. Okay. All right. Now, what is the next thing? We go to F. Now, it says that total cash drawings of 1080 was correctly entered in the cash book, but duplicated in the drawings. So good. This one to ask yourself, if drawings was correctly recorded in the cash book, which side of the cash book do you think was recorded? The credit side, which means the drawings will be debiting. And when they were debiting, the question says they duplicated it. So what do? We need to reduce it. Okay, so if we are reducing it, what will we do? The drawings have a debit balance, and if you are reducing something at the debit balance, you credit it. Is that not it? So you credit drawings, all right, of this particular amount, 1080. Then what do you think is the next one? Obviously, suspense. 108. Why suspense? Because the credit of the, what do you call it? The cash drawings, it was correctly done. It was correctly done. All right. So when they were doing the debit, they rather duplicated it. So the only thing left for you to do is to go ahead and credit your drawings with that particular amount so that it reduces it back to what it should be. Then you debit suspense. So being duplication of drawings or duplication in the drawings account. All right, so let me use in drawings account. All right, now correct it. All right, so that's that. We come to G. There was no entry into machinery account for the purchase of the machine by cash for 1350. Now, be careful because it says that there was no entry into the machinery account. It didn't say both the machinery account and the cash book. So it says that there was no entry into the machinery account for the purchases of machine by cash for this. So it means that it was omitted in the purchases account, not in the cash book. So it said into the machinery account. So then what do? We need to record it. So we will say machinery account. So we will say machine or machinery. Since the cash side was probably done and we are interested in correcting the machine, so what will we do? Suspense. So how much is that? 1350. 1350. All right, being what? Purchase of machine. Not recorded in machinery account. Now corrected. All right, so that is that. That is that. So let's move on to H, right? 10 is long. All right. So what do we have for H? H says that credit sales to Manuela, that one too is 1350, was debited to the sales account and credited to her account in the sales ledger. So it was debited to the sales account. But you see, sales is supposed to be credit. All right. So that is that. You did the sale, it's supposed to be credit. And the data that you have there should be debited. But they did the reverse. So this is the case where you do and you have to double the amount, okay? Because they've done the thing into the different positions of, so you have sales, you have something like the, what do you call it? The data. Now, this is what they have done. Repeat the error. They've debited here 1350 and credited here 1350. But meanwhile, it's supposed to be here and here. So what do? You have to multiply it by 2. So where's my calculator? 1350 by 2, that gives me 2,700. So I'll put 2,700 here, 2,700 here, so that when it will cancel within, then the correct entries will be standing. All right. So what do? What we did was to debit the receivables of 2.7, and we credited what? Sales, right? Of 2.7. That's it. So posting into the wrong side of account. Sales posted, sales and receivable posted at their wrong side of the account. Now corrected. All right, so that's that. That's it. You can cross the line. There's no law against such. All right, you can actually cross it. All right, so we go to the next one. The next one says that, so it means this thing we can take it up so that we have our lines. Okay. So rent paid 1.2 was posted to utility expenses. Then bring it back to rent. So rent payment. So rent account, sorry. Then utility. All right. So if you know these things, you can say error of commission. All right. But if you don't remember them, don't do that. Error of commission, now corrected. All right. So you don't need to memorize the types of the errors. No. You can say that being rent expense recorded in utility expenses, now corrected. That's all. All right. And how much is that? 1.2. All right. Then we have J. It says that motor van bought from PHC Motors on credit for 450 was debited to motor running expense. Then bring it back. It's the same thing as the rent and the utility. Bring it back. All right. So here, motor van was bought. So motor van. Then since it was debited to motor running, take it out. Motor running. So how much are we looking at? 450. 450. So purchase of motor van recorded in motor van running expense. Now corrected. That's all. Then we are left with last two, right? IJK. It says payment to creditors by check 1560 was not recorded in the books at all, although the expenses were given to although the receipts were given to the account. It's an omission, so we just record it. So if you did a payment, it was not recorded in the books at all. So what do? You would debit your credit, the check payments to a creditor. So it means you are reducing your credit. So, and we know that payment is check. It will go to our bank account. So we have bank that is going to reduce 1560. So then we have the creditor or payable 1560. So basically that is that. So omission of what? Check payment. Now corrected. That's all. Then we do the last one, right? Now the last one says that 555,000 cash received from Mr. Anochin Edeta recorded in the cash book was not posted into his account, then post it into his account. If you recorded it in the cash book, what did you do in the cash book? You debited the cash book. So you have to credit Mr. Anoche. So credit Mr. Anoche. All right. So if you are because he is reducing his receivables. So if you are crediting Mr. Anoche, receivables, Anoche. We have 555,000. Then they are told that the cash book was done, but so since that one was done, our representation here will be what? Suspense. That is 55. All right. Okay. So omission of recording in customer accounts now recorded or now corrected. So that's all. We are done. That's all. Now, the next thing we are asked to do is to draft our suspense account. Now, the suspense account is the test that what you did was correct or wrong. So now let's go and draft our suspense account. If the suspense doesn't balance, then it means that what we did was wrong. The suspense account. So we have our suspense. Put your CD sign. Then look for the opening balance. Now, the opening balance, we were told that it was at the debit. So balance go down. And it is 1350. All right. Now we go to our journals and see where the suspense were placed and record them as such. So we start from the top. The very first one, there is no suspense. The second one, there is, and it has where? Credit side. So purchases. You do it against purchases. So that is that. So purchases. And how much was that? This was 744, right? 744,000. All right. So the next one too, we have 1356, and that this is salaries and this, so there is no suspense. Then sales, there is a suspense at the credit side again, 795. So let's go there. Sales 795,000. All right, let's go and search again. So you don't really waste much time there. Let's go and search again. After sales, there is purchases, 96,000. Suspense credit. All right. 96,000, right? All right. So that is that. Okay. So let's go back. After the 96,000, we have another one, 1080. That is at the debit. So drawings against drawings. So right, drawings. It's 1080,000, right? 1080. All right, let's go and search. At the 1080, there's another one, 1350, suspense credit. So let's go there, suspense credit, machinery. So that one was what? How much was that? 1350. Okay, so it's just like our opening balance. So it kind of cancels it out. So the remaining should be what we should be focusing on, 1350,000. All right. Is there any other? Any other? What do we have? We've done this. There's nothing here. There's nothing here. There is nothing here, but there is something here. So we have 5 and it's at the debit, 555,000. All right. So it is now showing something. So what was that? Let me go and look at the narration for that, or the double entry for that. 555 was against what? Receivables. Receivable. Okay, so basically that is it. Now let's see if it balances. I can see it does, because you see what, this 4 will match this one and this 5 will be maintaining, just as there's a 5 here. But let's just add it up to see. So we have 1350 plus 1080 plus 555. That gives me total of 2,985,000. Now I have 744, I have 795, then I have 96 plus 1350. That also gives me 2,985. So basically, it proves to you that everything you did was correct. Now let's go to the last part of the question. And it says that assuming that the net profit they had using all the errors was, so we are talking about statement of adjusted net profit. Okay. So we have the net profits brought down, which is 28725. It's actually 2587. 500. All right. So that is that. So what are we adding? And the things we are lessing. Do you remember what the pattern we drew in the first question of the tutorial set? We are going to do the same thing. So let's go up. What are the things that are affecting P&L? Because we are picking only P&L things. Now you see this, right? So is that the first one? No. Bad debt is an expense. All right, bad debt is an expense. Now, what happened to the bad debt? If you read carefully, it says that it was omitted. It means it wasn't deducted at all. So it means we had to do a debit. So it means when we go to our net profit, we need to less it. So I showed you that all the credit things in the journal will be added to the net profit, and all the debit things which affect P&L will be deducted. So if the bad debt wasn't recorded at all, then you have to record it by what? Actually lessen it. So we have the lessen activities. So those ones that we will less, we know one, we have what? Bad debt. It wasn't done at all. So the bad debt that wasn't done is 169,500. So easy peasy. Look at the things that are, if it is at the debit side, come and deduct. If it's at the credit side, go and add. All right. So that is that. Because what you've done is the corrections. These journals are the corrections. And if something has to be credited, then you have to add it to the P&L. If something has to be debited, you deduct. All right. So basically that is that. So let's go to the next thing. For example, purchases account. You know, purchases account is inside the, what do we call it? The P&L. All right. Because it's a cash purchases. And you remember, opening stock, add purchases. So you see, the purchases is not something that was added to the cost of sales to be deducted from sales. It's at the debit. So what do? We go and also less, all right? So 744 it is. So that is that. Because it's at the debit side, so purchases, 744. What next? Anything that affects P&L? Salaries, debit side. which means, and be careful here. Here, you saw that it was done in the P&L, but it was debited to telephone. So whether debited to telephone or salaries, it was still a debit. So it won't affect any change anymore. So you will leave it like that. Because if you debited expense, you reduce your profit. If you also debited your salaries, you do your profit. So it was less actually, it's just that the wrong name was given to it. So we jumped that one. All right, that is that. Sales was overstated. Have you seen that? So sales, it was overstated. It means we have to reduce it, and that is why we debited here. So sales overstated, 795. Come here and reduce it. Sales overstated. So purchases omitted. Bad debt omitted. All right. So purchases was how much? The sales overcast. How much was that? Sales was overcast, so it was 795. All right. Let's go and look at the others. There's another purchases here. So purchases, debit again. You read that it was an undercast. So we need to increase it. So we less 96,000 again. So less 96,000. Purchases undercast. It's just like it was omitted. Purchases undercast. That is 96,000. Next, after that is drawings. Now the drawings, is it cash drawings or goods drawings? If it is goods drawings, you take care of that in the P&L. If it is cash drawings, that one goes to the balance sheet. So it was a cash drawing. So we won't tackle it. There's nothing like cash in P&L. All right. Then we come to machinery. Machinery too is an asset, so nothing in P&L. Then receivables and sales. There's a sales. This time around, the sales is what? At the, what do we call it? The credit side. So it was posted to the wrong side. It means the sales was debited before. Have you seen that? And if it was debited before, we need to bring it into sales. So if you divide this thing into two and you use that, you have just canceled off what happened. But still, the sales has to be recorded. So you are going to pick this thing as a credit, you add it to your sales, all right? So add it, it's 2.7. So add sales. That is 2.7. Because if you record just half of that 2.7, what you have done is that you have canceled the wrong debit that happened. You have not actually recorded the sales, you just canceled. So you have to do the extra to actually put it back to sales as it should be. All right, so that is 2.7. All right, so let's go and look for others. Apart from sales, what else? Rent and utility. This one too, it was done. They are both expenses. So whether it was in rent or utility, it was done. All right, so we won't do anything. Motor van was posted to motor running expenses. So it means that the thing shouldn't have been in motor running expenses. So the motor running expenses reduced the profit before because they put it in expenses. To correct it, what do? You have to go back. All right. So what you are going to do is that you are going back to take it out. There was nothing motor running. It was supposed to be motor van. So what do? You add it back. It's a credit side. You add it back to your net profit. All right. So that is that. So we have motor vehicle running. So how much was that? 450,000. So we add it here. 450,000. All right. Let's go and fish the others. All right. So here to bank and creditor, we are balance sheet stuff, doesn't come here. Suspense and receivable, balance sheet stuff, it doesn't come to P&L. All right, so now can we total everything? So this one is 31, right? So it will be 3150. So what I have is 3150 plus 2587.5, right? What gives me is 5737,500. All right, so the things that we list, what are their totals? So I have 169,500 plus 744,000 plus 975,000 plus 96,000. I have here 1,804,500. So that is that. So if I less these things from the top, we have 5737,500. That gives me 3933 1, 2, 3. So that is the adjusted net profit. So ladies and gentlemen, this is where we end the tutorial set question number 2. The next video will take care of tutorial set question number 3. All right, so go through it, be patient with that, learn it gradually, you'll be fine. Take care and God bless you. Bye-bye.